I get questions all the time about what the best dividend ETF is, and you know that my favorite for a long time has been SCHD. But I did a deep dive recently on this other dividend ETF because it's been outperforming SCHD for over 10 years. This viewer asked, over the past 10 years, DGRW has outperformed SCHD. While it does have a higher expense ratio and lower dividend yield, does the outperformance on the total return outweigh all of that? Can SCHD even maintain the same performance it's had over the last 10 years for the next 10 years? Do you think DGRW has more potential to grow than SCHD? These were some great questions that prompted some heavy research, and I'm going to share that with you today. For those of you that don't know, DGRW is one of the only value and dividend style ETFs to be positive this year, and it's actually returning quite high at over 12% for the year to date at the end of 2023, compared to SCHD, which is actually negative 4.37 for the year to date. DGRW has a smaller dividend than SCHD as its dividend yield is only 2.1%, but has been crushing SCHD on the total return at an average of 11.78% per year for the past 10 years, where SCHD has only had a little over 10% per year, which is still great, but that extra 1.78% that DGRW is beating SCHD, compounded over time long term, can really add up. I'm going to give you my analysis on DGRW and why you may want to consider adding it to your portfolio, especially for the insights that we're looking at for the next 10 years. I'm Nolan Govea, my students call me Professor G, and I made this channel to make investing simplified. Now you all know that I'm a huge advocate of the new 3-fund portfolio that I always talk about on this channel, and one of the most important pieces of that 3-fund portfolio is the dividend ETF, especially for those of you that want to hit financial freedom faster and passive income as soon as possible. SCHD and VYM have long been my favorites in that category, but this one, DGRW, is definitely making a strong case. DGRW is the Wisdom Tree US Quality Dividend Growth Fund, and it has a 5-star rating from Morningstar. If you would have put $10,000 into this ETF 10 years ago, you would now have over $30,000 and a nice little reoccurring dividend. DGRW follows the Wisdom Tree US Quality Dividend Growth Index, which is a fundamentally weighted index that consists of dividend-paying stocks with growth characteristics with market capitalization of at least $2 billion. This means that they're looking for not only dividend stocks, but dividend-paying companies that will grow faster and stronger than most other companies at a much faster pace, so you as an investor should see a higher return. The index is comprised of 300 companies in the Wisdom Tree US Dividend Index with the best combined rank of growth and quality factors. The huge difference between DGRW and those like SCHD and VYM is in the holdings or the makeup of the actual fund. SCHD is lagging so much because it has very little information technology in the fund, and those companies are on fire. So if the ETF doesn't hold them, you as the investor don't get the benefit when they go up. DGRW has sectors very strong, and their biggest one is that information technology, then consumer staples, then industrials, then healthcare, then financials, then consumer discretionary. This ETF is so unique because it is still a dividend fund and solid for the passive income strategy, but by having so much information technology, you're getting the best of both worlds now. As far as the companies within the fund, the top 10 are led by Microsoft, Apple, Broadcom, Johnson & Johnson, and Procter & Gamble. Now there's a specific way to invest in this ETF, especially for those of you that like SCHD as much as I do. But first, we all know that dividend ETFs bring the crazy amount of passive income, but the best way to increase that passive income is by getting more invested into the actual ETF. So why not get more money invested in the ETF with a super easy and solid way to actually earn some passive income? Selling ebooks and journals on Amazon is such a solid way to make some extra cash. I've made a video on this before because I love this option so much, and it's actually very, very easy, takes very little amount of time for the amount that you can actually make. And you can do all this from the comfort of your home with very little to no money to even get started. And the huge news here is that you don't have to do this alone. I found somebody who's doing a free webinar who's going to teach you step by step how to do this so you can make passive income starting as soon as possible. I highly recommend checking out Sophie Howard's Kindle Publishing Income, which is the sponsor of today's video. In this free webinar, Sophie will teach you everything you need to know to start this awesome passive income business that could make you thousands of dollars per month with very little work. You're going to get all the secrets of how to actually successfully sell these ebooks on Amazon. And don't worry if you're not a writer or even creative, because you actually don't need to do either of those things to be successful and make some extra money. And once you get it all set up, it's a largely automated income stream with little or no ongoing time or effort required, as little as 5 hours per month. This webinar is literally free, so do yourself a favor and click on the link down in my description to go check it out today, and let me know how much money you make in the coming months. And with that money, I hope you invested in one or two of these solid dividend ETFs that we're talking about here. So earlier I explained what DGRW is and why it's amazing. But the question from before was, one, basically which one is better, SCHD or DGRW? And then two, do I think DGRW has more potential to grow than SCHD in the coming 10 years? And I'll start with that second one. Yes, I think DGRW does have the potential to grow bigger than SCHD, specifically in price appreciation, but possibly total return over the next 10 years. I do believe that the tech space is going to continue to crush it, especially in AI and blockchain technology. So since DGRW does have more of those specific companies, I really like it. As far as which one is better though, that question is a little more complicated. SCHD is as solid as they come as a pure dividend ETF. It has a solid dividend of above 3.5%, and as stated before, it has had a solid total return of over 10% on average for 10 years. Yes, the total return of DGRW has outperformed SCHD, but we have to ask ourselves, what are we investing in here? When I'm choosing a dividend ETF, I want it to be one that's a little on the safer side, has a nice solid dividend, and then also has history of good, strong companies. While DGRW does have a solid group of strong companies, it's less of a pure dividend ETF and more so, in my opinion, more of like a hybrid ETF. It's kind of a cross between a growth ETF and a dividend ETF. So for me personally, since I already invest a healthy portion of my portfolio in growth ETFs specifically, it makes little sense for me to add in this hybrid ETF into a category where it's supposed to be a dividend style category. I already invest in QQQM and SCHG and VUG, which all have 10-year average appreciation of way higher than that of DGRW, with QQQM having an average of 18%. So I get my high-performing total return ETF in that category, and then I get my solid dividend ETF for more safety and cash flow with SCHD in my dividend category. If you don't invest in any growth ETFs at this point and only have a dividend ETF or only have a foundational style ETF, then yes, adding in DGRW does make a lot of sense. And if you just want to take a portion of that dividend investing money and add in DGRW just to have another solid dividend ETF in there, that makes sense too. I like it a lot and see it performing well for years to come. It may beat SCHD in the long run as far as total return, but if your goal is more cash flow and passive income, SCHD or VYM may still take the cake on that one. All of these are going to add to your net worth. And so to check out where your current net worth stacks up compared to those in your age category, watch this video where I also give you some free tools of how to calculate your net worth and what you should actually be concerned with at this point. I also go over how you can build that net worth faster, so watch this video now.